Assalamualaikum to Madam Ira. First of all, I would like to introduce myself and my group members. My name is Mhd Amierul Hafizey bin Badri, and my group members are Muhammad Izwan and Muhammad Azrai Faisal. Today I would like to discuss the value proposition of Islamic finance, structure and operational mechanism of Islamic finance system, and instrument offered by the displayed institution and markets in the IFS. The term Mudarabah is derived from verse of Quran and refers to walking and travelling the earth as it is activity that Mudarib performs in order to seek profitable opportunities. It is also an ideal principle for Muslims to conduct a joint venture business as mentioned in Hadith, as Prophet Muhammad used to practice this contract. As a lot of evidence have shown, Mudarabah was one of financial modes that was prevalent and used throughout Middle Age history. Mudarabah was a pre-Islamic custom used to finance the caravan trade in Arabia. It was later approved by Islam as a legal means of financing, as the Prophet Muhammad used to involve in Mudarabah transaction. The Prophet companions such as Umar and Uthman, the second and the third rightfully guide caliphs, are also used to invest often monies under their protection in trade business between Medina and Iraq by Mudarabah finance. Mudarabah is also known as Jirat Mukarada. In Europe, the instrument was known as Commander, which was practiced by Venice merchants since 11th century. Mudarabah is a profit and loss sharing contract which one party is known as Rob al-Mal or financier who provide all capital need for financing a project, and other party known as Mudarib or agent provides labor and effort. In this contract, the proportionate share in profit is predetermined by mutual consent between the two parties, but in case of loss, only Rab al-Mal or financier bears the capital loss, and Mudarib loss by get nothing in return for his expended time, effort and labor. Hanafi school distinguishes Mudarabah contract into two types with regarding to the agent's activity: restricted and unrestricted Mudarabah.
Basic Sharia rules concerning Mudarabah. As the method of valid condition of Mudarabah contract, some sets of Sharia rules toward Mudarabah financing were recommended by Mufti Muhammad Taqi Usmani in 1999 as follows. 1. Capital must be specific at the settlement of the contract. Uncertain amount of capital lead to uncertainty about the amount of return profit. It is a necessary condition that the given capital must be known in particular unit as currency. Capital amount must be specific in terms of currency unit at the outset of contract if a party gives capital in form of merchandise. This capital cannot be a liability or debt on the Mudarib. It is a permissible condition that a Mudarib meets its own private capital with the capital of the Mudarabah and do arrangement of capital on the basis of Mudarabah principle. Next, the capital of Mudarabah must be delivered to the Mudarib. Regarding this condition, some jurists' opinion allow that capital owner can hold capital and deliver it gradually, according to the need of the Mudarib. In case of two or more Islamic financial institutions are involved in a Mudarabah contract as Mudarib, The distributable profits are distributed among them. The share of capital owner is provided by each. Stipulation of any restriction on the mudarib is permitted if the restriction is beneficial, does not cause a compulsion on mudarib to achieving the profit required, and is not counterproductive to the purpose of the mudarabah. Mudarib is allowed to hire an assistant. The mudarib's management is restricted to that is conducive to the mudarabah. The mudarib cannot lend or donate of the mudarabah capital. The mudarib is not permitted to purchase more than its capital. The mudarib is also not allowed to use the mudarabah capital for other partnership agreement with third party without capital owner exception or authorization. It is not permissible to impose a condition that forces the mudarib to bear capital loss except in case that loss is caused by mudarib negligence. It is permissible to take a security from the mudarib to guarantee the payment in case of negligence or infringement of the contract, but it is not allowable to take the security as a guarantee for capital loss or profit. The proportion of profit sharing must be specific. It is conditioned that profit sharing ratio have to be stipulated in the contract. The absence of the condition abrogates the contract. It is permissible that the profit sharing ratio can be stipulated in form of percentage or lump sum. Profit in mudarabah is shared according to the pre-agreement between the contracting parties. However, it is a condition that monetary loss is absorbed by the capital owner alone. The mudarib receives its share of the profit only after obtaining the permission of capital owner. Also, the mudarib is entitled to receive its share of profit only after the capital is recovered, because the Sharia principle states that profit is protection to capital. The ownership of the mudarib becomes secure after the liquidation of the mudarabah and the capital owner has recovered its capital. Lastly, the mudarabah is terminated if one of the two parties resigns, given that it is an optional and not a binding contract. However, some of the jurists hold the view that mudarabah is binding and it cannot be rescinded if the mudarib has common work.
Next is I will explain about the term deposit under contract murabaha. So there are three types of term deposit under this contract, which is the first one is murabaha fixed deposit. It means Islamic banks offer an Islamic fixed deposit returns to their depositors. Why? The conventional fixed deposit product where return are paid only upon maturity, which is the product could make a payment of profit to the depositors when the account is open. Customer can indicate to collect either in the form of cash, banker's check, demand draft, or transfer it to the Islamic saving or current account. So for this contract, it is based on the concept of tawarruk, which is in relation to commodity murabaha, which requires the customer to appoint the Islamic bank as an authorized agent to purchase a commodity from a commodity trader on a cash basis. The second term deposit under contract murabaha is wakalah unrestricted investment deposit. This means contract facilities the Islamic bank to define benefit that the depositors would obtain in the form of certain minimum returns. So as an authorized agent, the Islamic bank will act on behalf of depositors to manage and invest the deposit in various Sharia compliance instruments. The last terms deposit under contract Murabahah is Mudarabah General Investment Account, which means Islamic bank accept depositors for the purpose of investment from customer as offered under the deposit facility. Mudarabah is a contract between two parties, which is the owner of the capital and the entrepreneur of the proposed project were both agree to share the profit based on the agreed predetermined profit sharing ratio, while the losses is to be borne by the owner of the capital if the losses occurs.
Islamic bank use Mudarabah as core structure of investment deposit. Investment deposit is similar to saving and time deposit of conventional bank that they have to pay some return to depositor. However, with the help of Mudarabah, Islamic banks do not pay the return in form of fixed interest rate, but in form of proportion of profit share. Prevalent type of investment deposits are as follows. First one is general investment deposit, which has no special requirement. Profit is calculated and shared at the end of accounting maturity year, say 3 months, 6 months or 1 year. Next is special investment deposit, which is similar to general investment deposit, but adding some special conditions such as which require the bank to invest in particular project or sector. Next is limited period investment deposit, which mutually determined by the depositor at the bank. And last one is unlimited period investment deposit, where the period is not specified. Deposits are automatically renewable unless a notice of 3 months is given to terminate the contract. Although the type of investment deposit are various, however, their structure are similar as below. The customer deposit funds to a bank as Mudarabah contract. Then the bank uses the funds in its business to generate profit. The business generates positive or negative profit. The positive profit are shared between depositor and bank at a pre-agreed agreement, and negative profit are absorbed by depositor as the decline of the asset created with its investment and the value of the deposit are declined. In capital market, Mudarabah are applied to provide equity-based financing product as trustee partnership facility by financial institution. As Rob Al-Mal, a financial institution provide capital to customer or business enterprise. The customer or business enterprise acts as Mudarib, who is responsible for management of business project. Islamic funds are also typically built under a two-tier Mudarabah structure. Although at present most of funds in the market are available only for big amount capital investor, generally requiring at least $100,000 of investment money. However, smaller minimum amount could be offered in the near future in response to the growth of Islamic financial market.